Here's why the energy price rally is not over. In fact, we could see a much bigger price squeeze. Let's look back at what has happened so far. Exactly a month ago on 22nd of February, Putin has actually made a declaration to start recognizing rebel regions in eastern Ukraine, which is the Luhansk and Donetsk region. That was the start of a new high for Brent futures. In the markets, there are actually two kinds of oil trades, WTI and Brent. If you're not familiar, track the Brent because Brent is more internationally used. In addition to oil prices, we'll be also discussing about coal prices as well as natural gas prices. Let's look at what Elon Musk has actually tweeted on 5th of March. This was 2 weeks into the war. Obviously, this would negatively affect Tesla, but sustainable energy solutions simply cannot react instantaneously to make up for Russian oil and gas exports. Later, we'll actually see some numbers to things. Goldman Sachs agrees to it somewhat. They see 3 scenarios, and one of which is crude price reaching $175. Let's flashback the Brent futures chart. You see that it kind of peaked out at $130. That is in start of March. And there was a 30% rally in a week. Such volatility is only seen, and some have speculated that such surge in oil prices could cause recessions. But is $130 firstly an expensive price to pay if we compare against history? This chart over here shows oil prices versus inflation adjusted prices. What we can see is that if we adjust prices for inflation, $130 is not even what it used to be in 1980. But that's not the most recent peak. That recent peak was actually in 2008, where we had a commodities super cycle after the global financial crisis. That inflation adjusted price is closer to $180. So back to the question again, is $130 for oil price expensive? Quite possibly not. But wait, why did oil prices actually plunge? To understand that, let's look at the world's biggest oil consumers. Number 1 is US. Number 2 is China. And they too are much bigger than the rest. China has always adopted a very defensive stance against COVID-19 spread. The vaccination rate in Chinese population is pretty low as compared to many parts of the world. And that's why when there was a major outbreak again of COVID-19, they actually decided to do lockdowns. Almost 50 million people were forced to lock down for a short period, one of which happened in Shenzhen. And as we know, if China consumes 13.2% of world's share of oil, if they slow down their consumption rate, that would naturally reduce some of the demand. That is why prices for Brent futures corrected severely back down to $100, giving up everything of its past rally since 28 February 2022. However, as stated in this article, Shenzhen has since lifted its city-wide lockdown, just only a mere week or two into their lockdown process. What we can guess is while China is still taking extreme caution, it is very unlikely that they'll do that massive Wuhan lockdown that we've seen at the start of 2020, halting all operations in terms of their industries and in terms of their factories. That is why oil has since risen sharply. Let's look back again at the world's biggest oil producers. Right on top is USA again. Second is Saudi Arabia and third is Russia. Let's speak firstly on US. US is the world's biggest oil producer and it is also the world's biggest oil consumer. They are at this moment self-sufficient, so their supply is not going to contribute to the rest of the world. That leaves us all to rely on Saudi Arabia and Russia, which constitutes 12 and 11% respectively. Many countries at this moment are sanctioning Russian oil. That includes the European bloc. They are trying to stand in solidarity with Ukraine. But wait, let's look who else is at the top of the world's biggest oil consumers. If we see this chart over here, we'll see that China and India are also big oil consumers. These two countries have the world's biggest populations. And that is why they have been refusing to really clamp down on importing Russian oil, simply because they are not big producers of oil themselves and they rely a lot on Russian oil. Hence, China appears to be an ally while India appears to try to remain neutral. But let's look at the fourth biggest consumer of oil, that is Japan. They still need to go to the open market to source for oil if they want to appear to be in unison with the West. That can also be said of number 8, which is South Korea. Surprisingly, Germany is only number 10 in terms of the world's biggest oil consumer, and they are actually the biggest in the EU bloc. Looking at this list, you may be thinking, how does actually China sustain its immense energy requirements? That can actually be explained with another energy source, which is coal. Coal prices have actually outperformed almost all commodities, including oil and natural gas. For a one-year performance, they have clocked 260.65%. In the last month, 43.04%. So US actually does a lot of shale gas production. As you can see in this chart over here, it has allowed them to become the world's biggest oil producer. China, on the other hand, still relies a lot on coal. And they can actually exert a lot of political influence over coal prices, something that we have seen happen before. So while China controls coal prices, they actually also do not export out coal. Whatever they produce, they use it for their own consumption. And the same can be said for India. That is why when we see in terms of the world's biggest coal production, you see that China and India also sit atop that ranking. Number 3 on the list is actually Indonesia, and number 5 on the list is Australia. Will these two countries be able to provide some energy alternatives for the world? Let's look at some further information. In January 2022, Indonesia has actually banned coal exports amid domestic supply worries. Their biggest customers are China, India, Japan, and South Korea, all of which are on the top 10 list of the world's biggest oil consumers. However, the Indonesian government ban was lifted as of 31st January 2022. They have mentioned that they will start supplying some coal to the rest of the world. If we think about it, if Europe wants to turn off Russian oil and gas, certainly they have to find alternatives, correct? USA, they produce oil, but they are using for their own consumption. China, they produce coal, but they are using for their own consumption. So Indonesian coal and Australian coal could be solutions that Europe can tap on, that can alleviate some demands for oil consumption. Europe thermal coal imports have been increasing for the last few months. And at this moment, Europe is in winter season. That is why energy is definitely required to keep each and every household warm. But coal is an energy source that leaves a lot of carbon footprint. The energy source that supposedly is the cleanest is natural gas. That is why Germany has actually built Nord Stream 1 10 years ago to get supplies directly from Russia. And in progress was actually Nord Stream 2. That was meant to double the supply of natural gas coming from Russia. To stand together with the EU bloc and provide support for Ukraine, Germany has halted developments of Nord Stream 2, but is at current moment still using Nord Stream 1 to take supply from Russia for natural gas. To understand the seriousness of this whole energy crisis, we should also refer to the biggest natural gas producers of the world, and Russia, as you can see, is the number 2 exporter for natural gas. If the world sanctions them away, that leaves a big hole in terms of the natural gas supply. And number 3 on the list is Iran, someone who is erratic and not many governments dare to trust their energy supplies to. If you have followed through here and learned something, smash the like button because it's going to take hours to prepare this presentation for you. And think very carefully, this surge in oil price, has it ran its final legs up? Or are we just in the midst of a real big oil and energy squeeze? Cutting Russia, which is the number 3 oil producer, number 2 natural gas producer, from the total world energy supply is a dangerous move that could really keep prices high. In Singapore, we use natural gas to create electricity. Expect electricity prices to increase in the coming months ahead and prepare for the worst. With that, I'll sign off from this video and invite you to some of my previous tutorials I've done on companies that you can get invested to protect yourself against this whole commodities-driven inflation cycle. With that, I'll sign off from here and see you there. Take care and goodbye.